to another edition of Strategic Moves with Lou. My name is Mike Hendren. I'm a licensed real estate agent with Strategic Realty in Wichita Falls, Texas, and sitting over here is Lou Italis. She is the owner-broker of Strategic Realty here in Wichita Falls. And Lou, how you doing this week?
Oh, it's just trucking along.
Rocking and rolling.
A little bit of rain.
Yeah.
Cooling everything down.
Yeah. Starting to feel a little more like fall.
It feels
Finally.
like fall.
Finally. Well, we have a very special guest with us in the studio this week. Introduce our guest, please.
We got Nicky Bomer here from Jacksboro Bank.
Jacksboro National
Bank.
National Bank.
National Bank. Okay, cool.
Yeah, we talked about this earlier.
Yeah, I know. Well, I always just call it Jacksboro.
I know.
Yeah.
I just shorten it.
There you go.
Whenever I talk to any of my clients.
Somebody's got to
just
give you a
call
hard time
Jacksboro.
around here, so it's me. You know,
Yeah.
All right.
And internally, we go by JNB a lot. So
JNB.
like
Okay.
acronyms, that's a good
Yes.
way to remember.
Yes,
Yeah.
that's good. And before I forget, we are having trunk or treat this month
Yeah.
at the office. So everybody come on down and get some candy.
What days are going to happen?
Oh, shoot. It's a Sunday. That's the only thing that I remember. It's
Well, I think Halloween is on a Sunday this
yeah,
year.
it's
So.
30, 10:30. Is it 10:30? No,
31.
10:31.
31.
Between 6 and 9.
Yeah.
Bring your kiddos. Put their costumes on.
Yes.
We will be giving out candy, and if you want to participate and be a trunk or treat so that you're not doing it at your house or whatever, you guys can come on down and open a trunk in our parking lot too.
Hey, if
We
you're at
always need
home, you
more.
can do what I do. Turn out the lights, don't answer the door, eat all the candy.
No, this year you're going to have to come over.
I know.
You're going to have to come over and do a trunk. We need a big, huge Igor. Is it Igor?
Igor?
Yeah, we need a
Like
giant.
You need a giant.
Igor the giant, yeah.
She's looking at me.
You're going to be Igor the giant.
Oh, I'm the giant. Okay. Well.
I'm always a witch.
My standard costume.
Yeah, mine is always a witch. And,
Yeah.
and my granddaughter this year is going to be Minnie Mouse.
Oh, okay.
Pink Minnie Mouse.
Very cute.
And what time is it going to happen on the
It's
31st?
between 6 and 9.
Between 6 and 9. Okay. All right. That's happening this year.
Yeah. Well, it happens every year, but we try. The first year we did a haunted house as well.
Yeah.
But since COVID, the kids really haven't really been able to do
things
something
got
like that.
tough.
Too many crowds, too much going on. But anyway, all right. So Nikki, you are a mortgage lender,
Correct.
and you do the majority of the loans that you do are going to be owner occupants, like FHA, VA, conventional.
Somewhat. So we kind of focus, or I focus on secondary market loans. Secondary market loans being loans that are sold out onto the secondary market. And so they are bundled up and sold to Fannie Mae or Ginnie Mae or whatever government entities that
Right.
purchase those. So that is a lot of times when you're talking FHA, VA, USDA loans, those are owner-occupant properties. That has to be the occupancy type.
Right,
for that.
right. It has to be a homestead.
Yes, but we do conventional loans as well. And so with conventional loans, we offer owner occupancy, second homes, and investment properties. There's just different guidelines.
For an investment property, is that still considered a secondary market type of loan, or is that going to be an in-house?
No, we can sell that on the secondary market. They're actually recently, Fannie Mae shut down the purchase of all second homes and investment properties for a short period of time. Their appetite went away for that, but they just opened that product back up again. Of course, the interest rates are higher, the down payment requirements are more.
And that varies based on the
Credit score.
Score.
You minimum 20% down for investment properties sold on the secondary market. Always have to have that better rates with 25% down. And if you own 1 to 4 rental properties, the pricing is different than if you own 5 to 10. And
gotcha.
so there's some restrictions there and also additional reserve requirements. So they want to see that you have enough funds in the account to cover all the mortgages should something happen. That there's not extra risk for
Usually
them.
it's like 6 months worth of reserves, or is that something that can fluctuate?
Yeah, it's 2 to 6 months depending on credit score and the number of properties. So,
okay.
but that's 6 months per property
You have to have
principal,
escrow.
interest, taxes, and insurance. So that's 6 months per property.
Oh, wow.
Yes.
Yeah, you have to have a pretty penny.
So it's not, a lot of times we get folks that come in that have some ideas about how they can get into the investment game. And they don't necessarily have the funds available to do what they're hoping to do. Now, there are in-house products, and we do have an in-house commercial lender who will offer some options if the property won't go secondary market, or if there's some sort of glitch, maybe self-employment. That can always be a little bit of a tricky thing when you're talking about how we calculate income for secondary market loans. So we do have an in-house lender. His name is Clayton Hoff, and he's been
I met him yesterday.
He's a great guy, and he's become real instrumental in our office, really growing his portfolio with construction loans. And some in-house.
And you guys do new construction loans as well?
We do new construction loans.
For the builders or for owner occupants?
We will do spec homes for builders. We have some restrictions on how many we're going to get out there and do for one individual builder, but these are typically custom homes that we're doing for the borrower, for the customer who's building, and we're doing their construction loan, and when it's completed, we are refinancing that into a permanent loan product for them.
You mentioned something that is kind of an important topic for the self-employed when they want to come do a loan. Talk a little bit briefly about what they need to come to the table prepared with as far as documentation, proof of income, et cetera, because we've had a lot of entrepreneurs pop up in the last year. This pandemic has led a lot of people to
a lot of money floating around,
and they're starting their own businesses. So you got a lot. I think you have more self-employed people today, perhaps, than we've had in a while. So what do people need to bring? A self-employed individual, whether they're a sole proprietor or LLC, whatever they've got, what do they need to bring with them prepared to start the loan process?
Yeah. So and it's interesting you bring that up about COVID as well, because there have been additional guidelines and documentation layers added to the loan process for self-employed people because of COVID.
Yeah.
Some businesses have thrived during COVID, and some have not. And so the additional layers of documentation, they want to see that the business is still active, doing well, and not looking. When we look at self-employed people, typically we look at a 2-year average income. So
they have to be in business for at least 2 years. It can't be like a 6-month type thing.
Correct. There are always exceptions to the rules and some caveats. So I never want to discourage someone from
there's other options
from applying, and let's figure out how to make this work for you, or at least give you a time frame on when you can.
A numbers game.
Yes,
it's kind of a numbers game. So if you play with the numbers and you play with the different products that you guys provide,
sure. And if somebody has a history of being a nurse and then they decide to become a travel nurse and become self-employed, that's a little different than somebody who has been a banker and decides to open up a flower shop. It kind of, it depends on like your history in that field.
In that industry.
And so we can show some consistency, but typically you're going to need 2 years of individual tax returns, 2 years of business tax returns, and then with the additional COVID requirements, you're going to need a year-to-date profit and loss. You're going to need 3 months bank statements that cover the last 3 months of the profit and loss for the business, so that we can confirm
show the income
that not only are the previous 2 years, do we have an average there, but we can see what the business has done so far, and the bank statements will substantiate the document you've provided.
Right.
So it'll be analyzed to make sure that your profit and loss and your bank statements
coincide.
Corroborate and support one another.
And that you mentioned, the length of time in business and so forth, and the business tax returns. So that brings another question to mind. So like in my case, so I'm a realtor.
Correct.
So I'm considered an independent contractor,
Right.
basically.
Right.
Okay, so that's one thing. But then I also own another business that's an LLC. But I'm the only member of the LLC.
Right.
So the IRS treats me as what's called a disregarded entity because I'm not. So my income
just
from
do it
that
on a
business is
1040.
done on a 1040 with my
Yeah,
my
because you're a
other
sole
income.
proprietor. Yeah.
So how do you treat that situation where I've got an LLC, but it's a single member LLC. I'm a disregarded entity, so I'm not really filing a separate return for the business. It's all kind of combined
Right.
into that 1040.
They would just at that point they would just look at the 1040.
Correct.
Yeah.
Correct.
Yeah.
So
Okay.
if you're filing a 1065 or an 1120S separate,
Yeah.
corporation,
Right.
S corp, C corp, something like that,
Yeah.
or then we're going to get your K1s and
Right.
all of that.
Right.
So depending on when we look at your 1040, we're going to know immediately if there's an additional return we need to request.
Right.
Based on where your income flows onto that
Right.
tax return.
That sounds
Yeah. And so one of the things self-employed people get frustrated with, even after they've been in business for the proper amount of time to qualify, is that obviously when self-employed people work on their taxes, they look at every
Take all
expense
the
and every
expenses
deduction
possible.
available, which
Right.
is what we do. We're allowed to do that. It's
Right.
totally legal.
Right.
But what happens is that net bottom line income is typically far less than the self-employed person thinks they
Wants to
make.
Yeah. Wants
If
to
I
show that
ask
they
them
make.
how much they make, they'll tell me one number, but then if I look at the tax return after expenses, it's typically much lower, and that is the number that we are going to use for qualification.
Minus depreciation.
There are a couple
or
of
you add back.
non-tax, non-cash expenditures like depreciation or mileage,
Right.
where those are expenses you can write off, but they aren't actual cash that went out the door.
Right.
And because of that,
You can add it back.
you can add it back to the bottom line.
And interestingly enough, you're probably seeing a lot of refis right now.
Yes.
There's a lot of that going on because interest rates are so low.
They're fantastic.
And people are taking advantage of
Correct.
cheap money right now. No other way to put it. It's just right now money's cheap.
Yeah.
So do the same rules apply from an IRS standpoint, from a tax standpoint, with that qualification of income for the refi as it would for a new purchase sales, for example?
Yes, on every transaction where we are going to verify income, those rules apply.
Okay.
The exception to maybe an income refi would be a VA IRL, which is a VA interest rate reduction refinance loan. It's IRRRL. And
Lots of acronyms.
yes, and so on a VA IRL refinance where we're benefiting the veteran and they are making their payments on time, so there's no reason to think that their income cannot cover the payment. We do not verify income. There's no income verification for that type of loan.
Okay.
And then depending on the length of time someone's been in business and maybe the type of business they're in, because Desktop Underwriter assesses risk in a lot of different ways that are built into the program that you can't really pinpoint.
Yeah.
But depending on the type of business and the length of time, there are instances where we only need 1 year of tax returns, or we can waive the business returns. And so, that can alter the qualification if somebody had a really good year and we get to leave out maybe the prior year, which was maybe their startup year and they didn't make as much or something to that effect.
Yeah. So it's kind of a case-by-case basis.
Yeah, it's all based on the
It is.
individual.
And that's why it's important to make sure that you get a lender who is well versed
Yes.
in what they're doing and how they're qualifying someone, because if you have a lender who, and I don't want to pick on out of town lenders or big corporations,
we've seen a lot of those
but I know
problems.
I hear this from other people, so
Yeah.
is that sometimes they're speaking with someone who is more of a customer service application taker,
Yes.
getting an application and putting the data into the system and saying, yes, you are approved.
You read my mind. I was going to say that's the advantage of sitting down with a local lender, someone that you can physically go to or at least pick up the phone and know that they're close enough, and you can have a one-on-one conversation. You can build a relationship with that person, and they can learn about you, you learn about them, and then you can have a smoother transaction in the long run.
Sure.
Because you do get to build that relationship when you're dealing with these, as you said, out-of-town lenders or these online lenders, stuff like that. You can't engage in that relationship building aspect of it. It's like
They'll
you said,
qualify. They're going to qualify based on very rare, very basic data. But once the underwriter gets that return and gets all the documents and everything, they look at it and they go, well, this person needs to, they need to bring additional documentation for this, or they need to source this, or and then it turns out. I had one client that we almost lost the whole deal because he had some estate income, like he had an inheritance. It was a living will,
trust.
living trust or whatever.
Yeah.
And so he would receive about $10,000 a year in this income, and they had originally qualified him with that income, and then it comes out that he can't use that income because it's not consistent. Like, it's not always $10,000. Some years it can be 6, some years it can be 8, some years it can be 10. So it varies.
Yeah, right.
And so they couldn't. And then on top of that, the type of living will, I think it was like there wasn't an actual statement that was sent. There wasn't. There was other things that were going on with it. So they had to remove that income from his qualification. And then now, and then he changed his job too.
Yeah, it's really
or she changed her job. Yeah.
Yeah, it's data integrity is everything.
Right.
So the system, whatever data you put in to run it through the underwriting program, the approval that you get is only as good as the data that was input.
Right.
So if the loan officer isn't asking the right qualifying questions or digging a little deeper than just getting the number and what's on the surface, or can detect the red flags maybe or the obstacles that may come up ahead of time, then you do run into problems.
Well, that's going to add unnecessary time to the process.
Correct.
That
and
you
like
might
we
not
talked
have
about
to
last week too, is that the lending process is almost like going into surgery. It's invasive. It can be intense and it can be emotional for a lot of buyers because they don't really want to share that information sometimes, or they feel like they're being, picked on or that their life is getting picked apart, and so they don't like to share that kind of stuff. But when it comes to a lender, it's almost like, they need to have all that information. I mean, the client is asking the bank to give them a large sum of money.
Correct.
And in that process, when you're asking somebody to give you $100,000, $200,000, $300,000, they're gonna want to know everything about you.
Well, I think I compared it to an autopsy. It really is kind of a forensic examination of your financial life. You're laying everything out there to bear. Here's what I make. Here's what I owe. Here's where my money comes from. Here's everything, so that you can see what you qualify for. And that's the one thing that we tell our clients up front is, you want to buy a home, get pre-qualified.
Correct.
Have that conversation with the lender first, so that you know what you can afford to buy.
Well, and part of that too, building that relationship with somebody.
Exactly.
As you're right. People are hesitant to, share information. I mean, you have one end of the spectrum where maybe there's been some blips in the road and people feel a little embarrassed about it or whatever. And then there's the other end of the spectrum where people are very well qualified, have a lot of assets, but they like to keep that private and real close to the vest. So, so they, people don't want to share for different reasons. But the main thing with building a relationship is letting them know that you're there to help them achieve their objective and their goal in the least painful, most streamlined way, and that you are only asking for the information that is necessary to approve the loan. It's not, we don't need to get everything in a lot of cases. If you have 5 different bank accounts and you keep the money you plan on using for this transaction in one, well, I only need one. I don't need all 4. I don't need to know everything.
Right, as long as that one can qualify you.
And the goal isn't to, the goal is to help you get into the home you want to get into, but we also want to take responsibility for making sure that that we're not overqualifying you, that we're
or that we're giving you or that you're giving them the best interest rate that they qualify
Yes.
for, because that can make a difference.
Sure.
You know, I mean,
Right.
Sure.
what their income looks like is going to make a difference on what their interest
Right.
rate's going to be.
That's true. That's true. And making sure that I always talk to people about what kind of payment and what price range they want to be in and what they're going to be comfortable with. Because sometimes if their credit's really strong, I can qualify them for much more house than
Yeah.
they would
Sure.
be interested in. And my goal is not to get them in the
Over their
most
head.
expensive property over their head.
Right.
It's to get them into what they are comfortable with.
Well, that's
So
what I tell my
having
clients
that
too.
conversation
Is I
is
tell them
important.
basically, you know, you need to first figure out where where you want your payment to be, because the lender is going to tell you what you're qualified for based on your credit and your income,
Correct.
like you said. But if you only want to pay $1,200, then now we need to figure out what
price range
what
will
price range will accommodate that $1,200
Correct.
monthly payment.
Yeah.
correct.
With principal and interest and PMI and
Yes.
taxes and insurance. So, you know, I mean, that's important for me to have that conversation with them, to remind them that they need to do that before they talk to a lender, because the lender is going to qualify them for what they see that they can afford.
Yeah, the first question I always ask is, tell me a little bit about where you are in the process. Tell me, do you have a house in mind? And do you have a payment in mind? So, because I need to learn right away. It's not about what I can do for you, but what do you want from me?
Yeah.
What do you want me to help you with?
It's all part of that
Another thing-
pre-qualification process.
Sure.
Yeah.
Another
Sure.
thing that I tell my clients, because this process is very invasive, is we do have confidentiality.
Oh, absolutely.
Our you know, everything that they tell us, we're not going to. Our fiduciary responsibility is not to just turn around and tell the other agent or tell anybody, really.
No.
Right.
So, I mean, the bankers, or you guys have that also set
We have
into
privacy
your,
training
privacy
every
laws.
year, and privacy laws, and
So
you're
anything they tell you,
correct.
you can't even share that with me as their real estate
Correct.
agent unless they approve that.
That is correct. We are only, we would only, and we're only authorized, and nor would we ever share any information other than who they have signed a consent for to complete the transaction.
Right.
So to the extent that we need to talk to the title company or get a verification of employment, that is to the extent that information is shared, and that is with the customer's authorization.
Yeah, just like us as agents, you know, there's certain conversations that we're going to have with you, the lender, with the title company, and so forth, just to make sure all the I's are dotted and the T's are crossed. Basically,
Correct.
you know.
It takes a team.
Yeah, yeah. You know, do you need anything more from me to make this happen?
Right.
Does the title company need
Right.
something more from me to make this
Correct.
happen? Does everybody have everything that they need in place to make it work?
Confidentiality, I think, is key, because I mean, that, like I said, there's a lot of people out there that they get really nervous about. You know, well, why do they need that?
Yeah.
You know, like, what purpose is that going to serve? Or, you know, I already gave them a statement. Why do they also need a letter of explanation? And you know, they feel like they're being attacked sometimes,
Yeah.
and it just gets really kind of, you know, I have to have a conversation. Well, you know, I mean, you're asking them to give you money, so these are the things that they're saying that they need in order to get that money to you. So, do you want the money or not?
Some people you have to genuinely talk them off a ledge.
Yeah.
You do.
So,
I
you know,
think being
relax. They're not going to
transparent.
be able to tell you, you know,
Yeah.
they're not going to be able to spread that information around. It's
Right.
just for the purpose of getting that loan. And they're not going to.
Right.
Yeah. And that's another thing about getting local lending, too, is that you are going to have less amount of people touching that file. Because when you go to, let's say, Quicken Loans, or, you know, even if you go to what's another big one? You know, Bank of America, or you know, Wells Fargo, or something like that. The original person that you talk to is not going to be the person that closes this deal for you. There's going to be about 10 people in between that touch your file and that get more information, and sometimes things can get lost in translation, and they'll need that documentation again, and that gets very frustrating for the consumer.
Yeah.
You know, like, I gave them that statement. Where is it?
Yeah.
Right.
You know,
right.
so then you have to provide it again, and then it gets very frustrating for the individual. But if they go with a local lender, it seems like, to me, like there's less people in that chain, and they can get a little bit better customer service.
Yeah, I think we do have in our office 11 employees. that work on different files. I mean, we have several processors, and we have a couple of closers, and we have a post closer and underwriters and so forth. But I think what makes our process so streamlined and smooth is that we're all in the office together.
Yes.
Yeah.
So
You're not calling California and New York and
no. I mean, it's
Arizona.
kind of a joke that we'll sometimes send an email and 2 minutes later be standing in someone's door like, "Did you read my email?" You know, I mean, it's not like we're waiting half a day for a response. You know, especially if it's something that's important. But going back to the documentation and how customers can sometimes feel like we're asking for so much. I think the key there is transparency.
Oh, yeah.
There's really none of this is top secret stuff. I mean, I can explain to every customer exactly why we need the documentation we need, and what the purpose behind it is. You know, a lot of times we'll have to get proof of why there was a large deposit in someone's bank account. Where did this $8,000 come from? And there's guidelines on what defines a large deposit, and so it's not the same for every loan type or every individual.
Right.
But you know, the reason isn't just because we're nosy and want to know where you get your money
There's
from.
a reason for
but
it,
we
yeah.
do need to make sure that there's not additional liabilities out there, that money wasn't borrowed from a source that's not allowed for a down payment, which would be like a credit card advance or an unsecured loan. These are things that are not allowed, and we have to verify that information. And if it was a gift, then we need documentation from the gift
Letter
donor
of explanation.
and some things like that. So, you know, a lot of times just there will be that initial reaction of why do you need that? But the way to handle that and to make everyone comfortable is to just explain why that's not allowed. And I think most of the time when people understand why you're asking for what you're asking for, then that calms everything down. They just want to understand. And so again,
my client was not sharing that information. It was just yeah.
well, and we do have we have a portal where documents can be uploaded, and we have an online application, so
it's a very smooth
we can be as
transaction.
efficient and as I guess involved face to face or as technological as you want to be.
Right.
And that's the good thing too, is that now
you have
with
a
the
choice.
technology,
You have a choice.
Yeah, with COVID has opened up a lot of other sources for you guys as far as like how you receive the documentation. You don't need to actually have somebody in your office bringing you the piece of paper.
That's what I always tell people. Yeah, this is all, we are customizing this process to suit what it works for you. If you're busy and working all the time and you want to, email that to me and do that in a secure way or fax it to me, you can. If you want to stop by the office because you're more comfortable with that, you can. It's really customized to each individual and what they're.
Yeah, we still get the older generation that doesn't do email. I have a couple of clients that still don't do email.
I'm surprised sometimes the younger, because they're first-time home buyers and they really want to embrace and understand the process, and they feel like they're going to understand it better if I sit down and talk to them and explain what is an escrow account and what does that mean.
Another thing I've heard about some of the younger ones is they don't use email anymore. They don't use email at all. But everything's they text message everything.
That is true.
Or social media.
It's all TikTok.
So it's all TikTok and Snapchat and whatever else chat is out there now. And so they don't even have an email account. You know, I mean, one of my own children, I had to tell him, I said, you need an email account, and it needs to be something that sounds professional, not some ridiculous made up name that you've come up with, you know. And I guess that's kind of the trend with probably the under 30 crowd. I'm guessing would be more likely to be in that.
21 and 26, and my 21-year-old daughter, we Snapchat every day. So, I mean, I am on Snapchat, and that is how I communicate with her. Yeah. And she gets a picture and a text, and that's what we do.
But your clients really couldn't do it by Snapchat.
Well, I don't use that form, but I do offer text messaging.
Okay.
So I will, my cell phone number is on my business card, so I do get a lot of text messages as well as emails and phone calls. So
Well, Nicky Bomer is our guest from Jacksboro National Bank. We got to wrap it up here. Anything that we've not covered, or any last parting words that you'd like to communicate to people before we wrap this up today?
I guess just that Jacksboro National Bank is here in Wichita Falls. Our mortgage division is located in the Southwest building, which is formerly known as the Chase Tower, between Target and the mall. We are on the second floor. There is Tatum McDaniel, Clayton Hoff, and myself there as loan officers, and Kathy Gregory as well. There's loan officers to help.
That Kathy Gregory moved over to Jacksboro.
Oh, she's been with us now for over 8 years.
I thought she retired for some reason.
I think you're thinking a different Kathy.
No. I'm not talking about Davis.
No.
Gregory is I know her from way back.
Oh, okay. Well, yeah, she is
Her
with us.
former daughter-in-law used to work with us.
This sidebar brought to you by Jacksboro National Bank.
Well,
Just getting to know each other.
Kathy Gregory is there. Kathy
Wow.
Gregory is our branch
Okay.
manager and underwriter, and she is a loan officer.
Wow.
If people want to get in touch with you, how do they do that?
Okay, so you can call our office at 940-249-5290. You can also go to our website, which is www.mybanktexas.com. You can apply online that way or call the office, and one of us will help you.
Wonderful. And if you got a home you want to buy or sell, you need to contact us at Strategic Realty. We're online at strategicrealty.net, or give us a call, 940-689-7900.
Way to go.
Best way to get a hold of us is that way. Or, again, go to the website, strategicrealty.net. Nicky Bomer, thank you for being with us.
Thank you for having me.
Appreciate it.
You're welcome.
We'll see you down the road, guys.